Yes, you like, Chair.
Right, good afternoon, everybody, and welcome to the meeting of the Audit and Governance Committee on Tuesday, the 14th of November, 2023. The first item on the agenda is apologies for absence. So, Kirsty, do we have any?
None received, Chair.
None received. Okay. Declaration of interests. Members with interest should refer to the agenda item and describe the nature of their interest when the item is considered. Item 3, agreements of agenda items part 1 and 2. We have no part 2 items this afternoon that has come in. So urgent matters brought forward with the permission of the chair. I have none. And so on to item 5, which is audit of the 2022-23 statement of accounts, pages 3 to 45, to receive a report from Grant Thornton. So Andy, over to you.
If I can just start off, Chair, if that's okay, just by recapping to the committee where we are and where we've come from. So back in late September, we had the 21-22 accounts represented before the committee. These had been through some significant changes due to the pensions valuations. So it was back in September that these were represented formally to the authority, and also we received the audit findings report for 21-22. So moving on, we're now back where the associated changes have now been put through 22-23, and the bulk of the work of the audit for 22-23 has been completed. And these are presented to the authority as an additional item. But today's purpose, where we've got Andrew Bailey with us to talk through the audit findings report and to talk through the work that's been undertaken on the financial accounts for the last financial year.
Thank you. Over to you.
Thank you, Chair. So the report that's on the agenda is our audit findings report, and basically summarises the findings of our work in the 22-23 financial statements and the value for money work. As it sets out on page 5 of the report, our work is substantially complete, and subject to the completion of a couple of the number of items set out there in the bullet points on page 5. We expect to issue an unqualified audit opinion. There's been a small number of changes noted as part of the audit. Some of those are kind of if you remember back to where we had as Gordon said, the restatement due to the pensions, and then a bit of a change on the depreciation on the PPE notes. Those are things that have by default changed the opening position in the 22-23 accounts. So therefore they've just been reflected. Since this report was written, we've made progress against those bullet items there on page 5, with the only things now outstanding are some completion of our work on the property, plant and equipment valuations, which is the biggest area of work that we do, and it's quite detailed. And I'll go through the significant risks one by one, and I can update you on that as we go. And then the other item is the receipt of the pension fund letter of assurance from the auditor of the Devon Pension Fund. Again, it's another complex audit that invariably every year, despite how much resource we throw at it, always seems to present us problems. There's some additional testing that needs doing there because of things they found, but nothing that we're expecting to impact on the opinion for all the admitted bodies. Value for money wise, and this is just the high level messages on this at the moment covering. And so value for money, we've got a VFM specialist coming to do that work. The VFM specialist has broken her leg, unfortunately. She's had to have surgery. So we're looking to get a replacement in, with the aim still being to try and get that auditor's annual report to the January meeting to close off this audit period, and then lead into that handover to the next auditors. The one thing I would like to say before I go into a bit more detail is that, you know, at the start of here, we had in our audit plan, we had other risk, and that was around the capacity of the finance team, because with David and Fran, there was quite a few changes within that team. And actually, you know, my reflection is that the audit's gone really well, and I think that the team of the finance team have responded to all our queries as, you know, as quickly as they've been able to, have been supportive of the audit process, and I feel that the two teams have worked really well together. So that's just a sort of recognition of Gordon's team and Gordon's support, you know, throughout the process. So in terms of just a little bit more detail now, I'll just take through the just take you through some of the detail, just so that especially around the significant risks, and then I'll pause and I'll take any questions on anything that the committee might have questions on. So that our strategy, our audit strategy set out in our audit plan, didn't change largely. It did a little bit on the group side of things, and I'll come on to that shortly. And the materiality, which is effectively the number that if there was an error bigger than that, we would qualify the accounts, and we would reflect that in our opinion. That didn't change either, so that remained at £700,000. And then the important thing for those charged with governance for this committee is that triviality, which is £35,000, that also didn't change. And that is where, if there was an error above that, that was what would find its way into this report. Other items below that, we would deem as trivial, and they would just either be corrected or amended, or where you've got little, you know, punctuations and things like that that have changed throughout the process, just really sort of picky things, they wouldn't then find their way into this report. So if we move on to page 10. Page 10 is, and the first risk there we've got is management override of control, and that is the presumption that within every audit there's a risk of fraud, and we can't rebut that risk. That has to remain there. We cover that off through our work on journals and through estimations, and where management have made estimations within the accounts. That's where we focus that work, because those are the areas where management, if they wanted to, that's where they would potentially manipulate the financial position. So we've done a lot of work in that area, because that's a big part of the work we do. Journals is quite a substantive amount of testing, and we haven't identified any issues that we need to bring to the committee's attention. On the next page, on page 11, we've got improper revenue recognition and expenditure recognition. Now, expenditure recognition, we rebutted that risk as part of the audit plan for both the council and for the group, because of the controls that are in place, and we were happy that we didn't perceive that to be a risk. On revenue recognition, the presumption is that revenue might be recognised when it shouldn't have been recognised. Now, for a council, we normally would rebut that, because most income comes through grant funding and things that are quite easily controllable, easily reconcilable. So we would normally rebut that. What we didn't do at the planning stage, we don't rebut that for corporate entities. So for active torage, we didn't rebut that presumption, because at that point in time, we thought that the income would be material, and therefore we would need to rely upon the external auditors of active torage to get assurance over their revenue figures. However, and this is where I mentioned earlier about a slight change to our audit strategy in terms of the group, because when we received the draft financial statements and we looked at the group working papers, the actual amounts that are consolidated in are below our level of materiality on both income and expenditure. So therefore, it's below material. So the risk of actually improper revenue recognition being materially misstated, it couldn't happen. So on that basis, we've then moved to rebut revenue for the group, and we changed our strategy in terms of not relying upon active torage's auditors, because we didn't need to. All of our work was centered around agreeing the consolidation adjustments in terms of the group, in terms of those intergroup transactions. So valuation of land and buildings on page 12. Again, no issues to date. We've substantial, we are a good chunk of the way through this. We've got sort of 2 or 3 sample items left to finish. I'm completing that work myself, and at the moment there's no issues that I need to bring to your attention on that. Again, it sets out there that depreciation change, but that was something we found in 21-22, and has then just been reflected through into the 22-23 accounts. Pensions, again, we've got the restatement because of the triennial revaluation. That obviously changed the opening position for the 22-23 accounts because 21-22 changed, and that's just filtered through. Our work to date hasn't identified any issues with the pensions the pensions valuation. However, we're still waiting for the pension fund auditor's letter of assurance, which gives us assurance over the assets held within the fund, and then obviously a percentage share of those then are what's been reflected into Torridge's account. So we need that overall assurance before we can close off that area of work. So on the group on page 14, that was our other significant risk, and it was only a significant risk purely because it was the first time that the council had prepared group accounts. That was the only reason it was there. The numbers involved weren't, it wasn't an overly complex group, one company. I think it was I was quite pleased with the way that the group was put together. I felt like the working papers were good, really supported the group, made the work relatively straightforward. There were a couple of changes which is just set out on there that were reflected in the revised accounts. But generally the working papers are good, and the support, because I think I said to it earlier when I was talking about our work on the group was all about, if you think about it, you've got active Torridge's accounts, you've got the council's accounts, they come together, and the way you get to your group position is by then all the intergroup transactions, so where the council pays over the management fee to active Torridge, that's obviously shown as expenditure in one set of accounts, income in another set of accounts. So what happens on consolidation, those items are cancelled out. So all our work, because the end product was immaterial, was all around testing those transactions, and we tested 100% of those, and we did not identify any issues with that. There is one reporting item there in terms of an unadjusted misstatement, and to be honest, we didn't ask the council to adjust it, because as part of our final procedures, we wrote to the auditors of Active Torridge and asked for their audit findings report, their management letter, and within that there was an adjusted misstatement of £35,000, which is set out in the report, to do with an overstatement of VAT. Now, obviously, as that's consolidated in, if it's overstated in those sets of accounts, it's overstated in the group position here. But because the amount's not material, we didn't request that was adjusted. The next few pages talk about the key estimates and the work that we've done on those. Again, I won't go into any great detail on those. I think sort of page 17 is probably the one that's what underpins the pensions changes and the liability there, and it's how it sets out how we've got the assurance that all the different assumptions that are made by the actuary in coming to that valuation. We use PwC as our auditor's expert. They do a lot of work in this, and they say, right, all the assumptions should be in this range, and that table there clearly shows that those values are within those ranges. So that gives us comfort that that there's not going to be a massive difference, because a 1% change in any of these numbers on such a big number is itself a big number. Hence why we had the thing around the triennial revaluation, the need to change that. I think in terms of the detail, I think that's all I was going to cover really. I think the only other things I just wanted to quickly confirm is that there's no independence issues that I need to bring to your attention in terms of our own independence. And the fees are as set out in the audit plan when we presented that. They remain unchanged. I'll pause there, Chair, if that's okay. I'm conscious about we've talked a lot there, but I'm happy to take any questions.
Well, thank you very much, Andy. I think that's a very comprehensive review. And I think it shows that our account is working exceptionally well, which if you take that back to the team, you know, that's a very robust audit and we've passed it with flying colours. Thank you. Councillors, do you have anything you wish to ask? David?
To do with land valuations, you know, this fluctuating market, how are they sort of really established? And I know we used to have a asset management thing, didn't we, with all our bits and pieces that were scattered around the district, half of which many of us didn't know existed really.
Yeah.
Is that they all on that list when you do these land valuations? Because I'd like to see that at some stage. It'd be nice to look at what the various parcels of land around. I know there's a bit of a dispute about one east of water, where the district says, no, we don't own it. He's like, well, yes, you do, because prevented the town council from doing anything with it. So, and that's not the only little parcel of land hanging around the district.
Yeah, I mean, all the land in the buildings is all held within the council's asset register. As part of our work, we agree the numbers in the accounts to the asset register. The asset register is then populated and updated each year based on the valuations that have been undertaken for that year. Those changes and those numbers that change, those are the ones that we audit. So in terms of like, you know, is everything on there? Yes, we're comfortable that the asset register is complete, and that then feeds into the financial statements.
Right. Okay. Thank you.
Stephen?
Again, on the page 12 valuation, say the property is revalued every 5 years. Yeah, external valuation, valuers are used, I'm assuming.
Yes, so in terms of what's the every 5 years, the code requires that an asset should be revalued every 5 years. So what a lot of councils do is they'll revalue 20% each year, and within that they'll probably look at their big ones as well, because the big ones will be in there every year. They go 20%, and then over the 5-year period on a rolling program, everything gets revalued. Torridge is slightly different to that, in that it does its 20% full valuation, where there's all inspections and everything else, but actually for the other 80%, there is also a desktop revaluation done as well. So each year, effectively, Torridges are revalued 100%, which is a lot better position to be in than where you've only done the 20% in some ways, because the risk of a material difference, because if you imagine you've not revalued something for 4 years, there could have been significant movement on that. There could be a lot of dilapidation, obsolescence, damage to the building, all these things that could happen, where at least with the indexation and the 80% being covered, it gives quite a bit of comfort that actually the valuations are fairly up to date, which is good.
Yeah, then that's the surprises.
Yeah, exactly.
You are external valuers used.
Yes. Yeah, so it's the district valuer does Torridges, so that's that. So but they sign off for the whole 100%. So yeah.
But the district value being
external body, independent of the council.
right, not in sort of in the commercial world of Jones Land, LaSalle or Savills.
Yeah, I mean,
are they on the
different councils do have.
It could be someone like that. I mean, we go through a tendering process, but it's a district valuer that has got the work to value our assets.
Yeah,
And they're all RICS qualified surveyors, plus they've got this additional qualification in valuations as well before we would commission them.
yes, it's just trying to differentiate the difference between a district valuer and from a commercial world, the names I've mentioned, or some of the names I've mentioned.
As long as they were qualified, we'd go, the district valuers is just the name of the body that's.
Yes. I think it could incorporate, and probably does incorporate some of those names. It could do.
Yeah.
Thanks for that. Is it, I'm not sure if it's relevant to this particular committee chair. The work that you just mentioned is tendered for. Yeah, and is that something that's available to ask questions on at this committee, or should that be a different committee chair? In other words, what charges are we making?
For the audit,
Yes, for the valuation.
for the evaluations.
Yeah, I don't have that information now, I'm afraid, but yeah, I can certainly give it to you.
I just wondered if I wasn't sure even if it's a relevant question to ask this committee.
But it's certainly valid that there are a number of associated costs, not just the audit fee, but the actuarial fees and evaluation fees that occur every year.
Yeah, but it's tendered for anyway.
Yes.
Yes, I'm well aware of the structures can vary quite a lot.
Yeah.
In terms of the valuation fees that can be applied. And then one other thing on page 14, it's a statement that in fact incurs on page 12. It keeps dying and have to keep rebooting it. And it may be the way I'm reading this, but let's stick to page 12. We've got the under risks identified in our audit plan, the bottom last paragraph. We therefore identified valuation of land and buildings, particularly revaluations and impairments, as a significant risk. Am I reading that wrong? Is that sounding alarm bells? Significant risk?
So the chair, yeah, so what that's our terminology. So when we do our audit planning, we identify the risks, what we perceive to be the risks of significant, like for material misstatement. So that's what we call them significant risks, because and the two big ones are always the pensions liability and property, plant and equipment, because a small change in all, if you think about a property valuation, there's a lot of assumptions that a valuer makes in coming to those end figures. So, and a little change in any one of those assumptions, if they are incorrect, would impact the end figure quite significantly, because you've got percentages being applied to big numbers, and therefore the impact would be big. So when we say they're significant risks, they are significant risks, because that's where the risk is. However, we've now done our work, and we're happy that that risk hasn't come to fruition. But the risk still remains, and that will be, next year you'll have different auditors. They'll sit here, they'll have an audit plan, and without any significant change to the code, two of the big significant risks that they will have will be pensions liability and PPE and property, plant and equipment, because they're the biggest numbers on the council's balance sheet. It's the same risk that every council across the country will have those risks. There might be other ones as well. For example, in this audit findings report, we've got group, because it was the first year that the group had been prepared. The council had never done that before. We, as part of our risk assessment, we thought, well, actually, there's a chance that might go wrong and they might consolidate the wrong figures. So therefore, there's a risk that actually it could be materially misstated. So we put that in as a risk, and then we responded to that risk with the work that we've set out here to make sure that we're comfortable. Albeit on the group one, that did change slightly because of the numbers when they came through. We're like, actually, it's not such a significant risk now because we can do the work ourselves.
Okay, so as I say, what you're saying there in my summary language is you identify the risk on one side of the page, and on the other page, you set out what you're doing to offset that risk.
Yeah, exactly.
One final point, the valuation of plant and equipment, is that done externally?
Yes.
Yeah, the same.
Well, there's not much valuation of plants and equipment.
Yeah.
For the most part, it would be in the situations where it was intrinsic to a building, that it would be subject to evaluation. So vehicles or stock or items like that wouldn't be subject to valuation.
That's it, yeah, because they're classed as insignificant.
Well, I think I probably misled you a little bit because our risk, if you look on there, our risk is the valuation of land and buildings. And I keep calling it property, plant and equipment, which
Right.
quickly, I'm sort of, what I'm saying is factually incorrect because the risk is on the land and buildings. That's where the valuation is. Equipment is valued at historic cost. Infrastructure, again, is historic cost of basically what you pay for it. So there's less risk in that because if you buy a computer, the computer is, is a computer, that's what it costs. And it just gets depreciated then in terms of every year, but it's not revalued. It doesn't change in valuation other than through depreciation. It's the land and buildings element that is where we've pinpointed that risk across the PPE balance. So apologies for misleading you slightly on my terminology.
No, I understand what you're saying. My question was more aimed at the plant and equipment. By that, I don't mean office equipment, but more, say, for instance, obviously the council authority is responsible for waste collection, for instance. Significant amount of spent on plant and equipment has recently been renewed. And there's obviously when that's renewed, does that audit of that process, does that come before this committee? Just looking at the overarching title of the committee, audit and governance.
You're referring to vehicles?
Yes,
Yeah.
just to give you an example.
Yes, they've been included within the fixed asset register.
Yeah.
They've been included within the balance sheet.
Yes. Is that reviewed? Obviously, I think this from memory, they're replaced every 5 years, I believe. So if they're devalued, depreciated on a straight line basis, is that then examined at the end of the 5 years for when they are replaced? See if the depreciation value ratio is correct. Otherwise, you would say if you depreciate a straight line basis over 5 years at 20% per year, or written down to nothing, or if there's actually a residual value, is that then taken into account to adjust the depreciation value over the next life of that plant and equipment?
Within the accounting policies, you'll see that our assumptions around depreciation will be stated. So those kind of issues will be stated. And it might well be the case for an auditor if we perhaps over or understated the life of the assets, then it would throw up an error.
Yes.
And if it was large enough, it's probably difficult to imagine an error large enough that it was a material interest to the auditor, but they might still highlight that there was a difference, and they might encourage us to change our accounting policy to have a more realistic lifespan of particular kinds of assets.
I guess that depends on how many waste collection vehicles they are. A massive figure, but we see storage is a smaller area, shall we say.
Yeah.
Anyway, thanks very much. Thank you.
Any further questions? Okay. I'll throw back to you.
Well, in terms of the report, I'm finished with that.
You're
The only thing left is obviously there's a letter of representation is almost part of the same agenda item. Again, it's a standard thing that we do at every audit, which is just it's basically the committee signing up to the fact that there's nothing you haven't told us about as part of, like, in terms of our records, nothing's been kept from us, things like that. Occasionally, we might add something specific in there if there was something that we'd done a lot of work on and we were maybe still kind of a bit unsure. There's nothing of that nature in this one. It's just a standard letter of representation.
Right.
So if the committee is happy, yourself and myself, Chair, will sign off the
We'll sign it
letter,
off.
and that will guarantee those minimum standards.
Right, so do I not have to just throw to the committee that they're happy for me to sign the letter of representation? So I'm happy to propose from the chair. I'm looking for a seconder.
I'll second it, Chair.
You got there first. All in favour? Unanimous. So that Do you wish for the accounts to be?
Yes, can we have? get those-
Right, so just popping back to item 5. I'm happy to move from the chair that we approve the accounts. So I'm looking for a seconder.
Right, can I just raise something on the account?
Certainly, Lauren.
I don't think it matters massively, but, I think that there is a mistake on page 10. I don't know why, but I think maybe this row of a table was gone, so it's the utilisation of surplus and capital expenditure. And if having a look, just cross-checking it with what was agreed in CNR, I mean, the numbers don't add up. If you add up the numbers in the column, you get 753, not 853. And all of those numbers are in the wrong place. So it was 293 for houses, 150 for the apprentice fund, and then 100,000 for agency backfill, 76,000 for the graduate, 50,000 for the election reserve. So somewhere in that in the narrative report table, there must be a row that slipped out and the numbers of.
Well, I think it's on page 7 or 8 for me.
I've got so it's on page 8 of your report and page 10 of the report pack for us.
Yeah,
And so if the bottom table, the utilisation, something's missing. So the numbers are not in the correct place. So it was £100,000 for agency backfill. That's where the first mistake comes in, and then it's £76,000. So all those figures need to drop down. £76,000 for the graduate, £50,000 for the elections reserve, £30,000 for the plough, £90,000 for lease costs, £13,000 for the pilot boat, and then £51,000 for the management fee for active storage that's been missed off. So it's just, I think, a presentation thing,
okay.
but it wasn't.
We'll certainly revisit that.
Okay,
So
with that correction.
with that correction, Lauren, you're happy to
I'm happy to
second.
second.
So if we just take a vote, all in favour. And that's unanimous. So we've sorted out items 5 and 6.
It's from, a long time ago in September.
Right. So just looking back to the agenda, I need not exclude the public because we have no part 2 matters. So part 8 doesn't apply, or item 8 doesn't apply. So with that, I can formally